Hello and welcome to CMS Forex News. I'm your market analyst, Nick Nassad. Today is Friday, July 17, 2009. The euro-dollar pair fell in favor of the dollar today as the jitters in financial markets around the possible bankruptcy of CIT Group continue to temper risk appetite following a strong rally in the first half of the week. Also, a terrorist attack in Indonesia increased the demand for the greenback as a safe haven overnight. The pair entered the session around the 1.4150 level and fell to test 1.4060 around the New York Open, though following a better than expected U.S. housing starts release, the euro did rally prior to the end of trading for the week. The Aussie-yen pair, an important measure of carry trade, saw further consolidation in today's trading as the yen gained overnight but stayed within the range established yesterday. Higher yielders arose strongly in the first half of the week on the back of a stronger earnings report from Goldman Sachs and a surge in global stocks on Wednesday. However, the end of the week has brought sideways price action. A report from the U.S. housing sector did reignite some risk appetite in Friday's New York trading, which put the pair to retest the highs seen at the beginning of the session. U.S. housing starts jumped 3.6% to an annual rate of 582,000, the highest level since November. May's figure was also revised up to show a 562,000 annual pace. The report signals that housing starts may have hit a bottom in the first quarter, and with lower borrowing costs and lower home prices, that we may be seeing the initial stages of a rally in the housing sector. Still, it will take more collaborating data to make that case more forcefully, as there are still problems with foreclosures and credit availability. The U.S. housing starts data did give the greenback a boost against the yen, with the dollar climbing back above the 94 level in the wake of the release. Just like in the euro-yen pair though, today's price action has been contained within yesterday's range, but now it looks like we're in a period of consolidation prior to the weekend. U.S. stocks were trading mixed during the New York session. The Bank of America and Citi posted strong profits, though investors viewed the earnings report with a skeptical eye. For the week, the pair has made a 250 pip counter rally to the decline seen to start the month. One pair that did seem to have a clear reversal this week was the euro-pound pair, which after hitting a high near 0.87 on Monday, slid down to the 0.8550 area midweek and then rebounded 100 pips from that low. The pound dollar was down on the day as well, though higher for the week. In today's session, the pair slid from the 1.6450 area to a low of 1.6265, which is close to a 50% retracement of the up move from the first half of the week. Yesterday, the International Monetary Fund said that the lack of a credible plan for the UK budget will put pressure on the pound, which combined with risk aversion overnight gave traders enough excuse to pair some of their long positions of this pair heading into the weekend. Next week's key releases include producer and consumer inflation data from Australia, retail sales figures from Canada and the UK, and existing home sales and the preliminary first quarter GDP data from the US. Also, the Bank of Canada will decide on interest rates, and Fed Chairman Bernanke will be testifying before Congress. And that concludes our coverage of the Forex market for this week. Thank you for joining us here at CMSFX.com, and from all of us here at CMS Forex, have a great weekend.